Okay, good morning, guys. I'm just sitting down with my morning decaf, and I thought I'd jump on and make this video. So I've had a viewer request for me to do a video on the trading model I use, right, and just to go into a bit more detail about it. So this is a model I use on my funded account with Apex, and it's the model that's kept me funded. So I'm happy with it. I'm happy with yeah, the way I've kind of refined it and yeah, how it's going. So yeah, so if we have a look at yesterday, right? So looking at Nasdaq MNQ1 yesterday. So I usually trade the London session. Now, if I don't get a setup in the London session, or I do get a setup but I miss the setup, as in you'll see sometimes I'll do a video where my trade just doesn't get activated, where price doesn't come back to my pending order and tag me in, which can happen when we get those really volatile moves where price just goes straight to target, which can happen, and it does happen. So if we look at yesterday, I was actually in this trade, but I actually closed out in profit in this trade. Now, I'll explain why I did that, why I didn't allow it to run. You can see it would have hit my target because it was Monday, right? Monday, when I look back on my trading log, so I track my trading log, I track my win rate and everything like that to see how I'm going, whether I need to refine things. So at the moment, my win rate is resting between 60 to 70% right now. Some weeks, the lower end, it will be around the 60 mark. If it was beginning to drop, I would reassess things and say, okay, what's not working right now? So 1 second, I have to let my dog out. She's crying. Okay, we're back. All right. So yeah, anyway, where we left off. Now, if we have a look, so 90 out of 10 of the times, 90% of the time, I'm trading the London session. And again, if trade runs off on me, don't get the entry, I'll have a look at New York and I'll trade it. So yesterday, I wasn't positive in the hope that the trade would have hit my 2R. So I did trade New York last night, and I did hit my target last night with New York. So I just had a 0.25 risk last night and made $222 on the 50K account. So yeah, not a huge amount. But for me, I've always looked at this trading game as a long-term thing, not a short-term. So for me, risk management is crucial, and that's what's kept my account. So, I'm not one to have a huge amount of risk. I prefer to keep my account. I do scale my risk. So sometimes I might have a 0.25 position, and if I'm trading another pair, let's say 6E, I might have another 0.25. So the max risk for me a day is 0.5%. All right, I don't go over that. So I have in the past, when you go on tilt and psychology comes in, but it doesn't end well for you. So for me, I just prefer a stricter trading, risk management. So if we look at the Asia range yesterday, what happened, right? So you'll hear me say price has gone and taken sell side liquidity. So what's that? If we look on the higher time frame, we can see on the 15-minute, price has come down to a 15-minute PD array, a fair value gap, right? So what did price do? It tapped into it, and what happened? Rejected offer, and it's gone up, right? So I call this a liquidity sweep. Now, if we look at the 1 hour, this is actually an order block as well. So if we go to the 1 hour, 1 sec, guys, I just want to clean this up a bit for you so it's not all over the shop. Okay, so we're back. Right, so where are we? Here we go. So if we look, right, oh, hang on, is this right on the 1 hour? Yeah. Where is it? Here we go. So there was an order block. See, on the 1 hour, price has come into that order block, right? Exactly. Order block before the push down, right? So these are order blocks in here. Is the up close candle before the push down, right? So that's the up close candle. Right, so if we have a look now, we'll go back to the 1 minute. So I'm looking for these areas of liquidity sweeps on the higher time frame. So for me, I want to see the 15-minute or the 1 hour, right? The 1 hour is the best. And as you can see, we definitely had a 1 hour sweep there. So if we look on the 1 minute, all right, we'll have a look at my entry. The way I trade, guys, is super simple, basic, right? It's not overly complicated. Some people will look at this and go, oh, how boring doing this day in, day out, but it works for me. I want to trade a model that works for me. As long as I'm doing a 2R and my win rate's 40% or whatever, I'm going to be profitable. But touch wood, so far my win rate hasn't been 40%, it's been higher, but you know what I mean? For a 2R, you just need 40% above to be profitable, right? So if we have a look at this, right? So on the 1 minute, we had that liquidity sweep here. Price had a change in character here, right? So when we're having a change in character, you can enter off the fair value gaps. For me, I entered lower down, right? Off. So see this here. So if you look at the 1 minute, that was our last swing high. I was waiting for price to break this swing high, and I was aggressive with the entry. The entry that I actually got out in profit was here. So I waited for this candle to break the swing high, and I put my pending there. You can see price tag me in, and then, you know, a little bit of drawdown, got in profit. I did get out of the trade. You can see if you're going to be super conservative on this, you can do the FVG, which I do as well. So a change of character happens, leaves a fair value gap, which is here. We look at price on the 1 minute, right? So you can have your entry there on the fair value gap, right? Targeted 2R. Now, I am always having my stops below the swing low leg of that displacement, right? So we had price displaced to the upside, my stop loss, which can make it quite big. So you see that would have been 88 ticks on that if I entered off the fair value gap. I didn't in this case. I entered off here. But still, it's not much of a tick difference. So if we have a look for 2R on this, it still would have hit, I believe. Yeah, so it would have hit if I entered off the FVG. So look, price went and hit it. I mean, you didn't really have much drawdown at all. If you had entered off this fair value gap, you would have only had this here. Honestly, oh, well, really, that's not really drawdown. Look at it. It's a tiny amount. Price came back to that FVG again and then rallied off. And you had all these breaker structures, right? So yeah, that is the trading model I use in a nutshell. If we also look at 6E, so EU, that also had a nice setup yesterday. London, I missed it as well. I didn't miss it. I couldn't trade it yesterday. I was busy watching NAS and then got out of NAS. And yeah, anyway, it is what it is. So if we go to the 15 minute, it's the exact same trading model, right? 6E. So if we have a look, hang on. One sec, I'll fix my chart. I'll be back. Okay, guys, so we can see with 6C yesterday, what happened is we took buy-side liquidity on 6C, right? So if you look, it lines up with a fair value gap here, bearish FVG, price came in, took it, and it retraced. So if we have a look on the 1 minute for the entry, all right, come back over here. Oh, well, look, hang on, what was that? What time is that? No, that's not. I was going to say, what the hell's going on there? Anyway, come back over here. Right, so okay, I don't know why my chart's done this. That is really weird. Hang on. The price is completely different. Right, I'm going to work out what the hell's happening here with this chart. Sorry, guys. I must have been, I don't know what I was doing. I must have been looking at a different day or something. That is so weird. So you can see here Monday, right? Because oh my God. Okay, Monday. What did we do? We took sell side liquidity and we went up. So if we have a look at this, right, on 6C, which again, like I said, I didn't trade it because I was busy with NQ. We'll go back to the one. Right, so I know that's today, right? So that's today. Let's go to, here we go, right. So we can see we took sell side liquidity, right? And we were looking for buys on 6C. So if we look at this, right, what are we looking for? If you can look for a fair value gap, an order block to enter off when we have the change of character. So we had the change of character here. We had a bullish fair value gap here, and we also had a bullish fair value gap here. Right, so either one of these fair value gaps could have been utilised. What you can also do with this is put the fib tool on it. So if we fib it, right, from the low, fib it to the low to, at the time you'd looked at this at the chalk. So let's say the high of the chalk, 50% was here. Now, if we have a look, price didn't exactly come back 50%. It usually will, but it didn't in this case if we look at that. Well, really, technically it did. But it was, you'd already had your chalk. So really then your your fib would be here. So this low to the chock high, your 50%'s here. Price did come back to it. See, it actually went through 618 and then went up. Okay, so you could have got an entry off that. So looking at that, yeah, you would have had your entry then on the second fair value gap, right, to get a better entry. So if we just get rid of that for a minute, right? Okay, so let's chart this up. So, right. So for me, you might think, okay, Tiff, well, how do I know that this is it, that I'm entering after this? Well, again, we're looking for, okay, we've got a long wick here. Prices, reaching for something. We're looking at the higher time frame. Was it a relevant PD array? Was it a fair value gap? Was it an order block? Have a look. What did price reach to? If it was something relevant on the higher time frame, for me, that is relevant enough for me to then look at this and go, yes, I'm entering off this. So then let's say we've entered off the second, right? Now, normally my stop loss is below the swing low. In this case, it would have been quite big, 15 ticks. I like to have a 7 tick if possible. And you can see if we had it below this swing low, we would have still been 9 ticks. So it wouldn't have been. So anyway, in this case, I would have probably done this, right? Looking at a 2R on this. Right, so that's 32 ticks. It's quite hefty, but you can see it hit. So for me, if I'm risking 7 ticks, I prefer that because you can see, you're in and out a bit quicker on NASDAQ. So let's just pretend we're in it for 7 ticks, right? So you're just going for 14, really. So, which is, we're 14, there you go. So you can see what I mean? Like you're in and out a lot quicker, but with this here, let's see, well, we're tagged in. Or we wouldn't have been stopped out, actually, no. So we're tagged in. That was the fair value gap. Hang on. The fair value gap we entered in on was this second one. Price came into it. You wouldn't have been stopped out. But anyway, because of this swing low, I would have liked it below it. So I wouldn't have risked it. But for me, if I really want to make sure, I'll have it below the displacement leg swing low, which is here, and then target the 2R from there. Just depends where price is, guys. So looking at this as well, right, I hope I'm not boring you, but it's all relevant. And for people that are wanting this information, it may help. So if we look at, let's go back to that day, Asia, right? So, this trade, right? So it would have taken profit, as we know. And we look at New York. We also had the buy-side model with New York. We had some liquidity taken out on the 15-minute, which was a bearish fair value gap at New York. And then we had the swing up. Okay, I didn't trade it. Why? Because I already had made profit with NQ, NASDAQ. And for me, I have my winner and I'm done, right? So I'm not seeking or chasing trades. It's not in my trading model. So we get rid of that for a minute. So if we look at the Asia range, right? Okay. So usually my TPs are within that Asia range. So we have the breakout, the sweeper liquidity, and then I'm, trading in the opposite direction. If the sweep was a small sweep, say we only swept here, right? So we came into this order block and swept, right? I wouldn't be looking at taking it. Why? Because the market structure shift, so the changing character, like the breaker structure to the upside, would have been within this Asia range. What does that mean? It would mean I'm probably taking my entry in a premium area, not a discount. I want to be taking my trades well outside the Asia range if possible. Sometimes it doesn't work out, so if you want a video as well about premium discount prices, let me know. I can do a video on that, how I'm doing that. But yeah, so you can see here, this trade here, when I fibbed it up yesterday, was in a discount, so that was good. We were in a heavy discount yesterday. It was a good trade. And sometimes you're going to get those trades that present themselves at London that aren't in a discount, that are in a premium. Just don't take them. Take your trades at the highest probability, right? And looking at 6E, what can we see? That we've taken a shit ton of sell-side liquidity. Look at this. So much sell side. We've been extremely bearish on the higher time frame. If we look at the daily, let's have a look at the daily. I also like before a trading session. So before my London session, I look at the higher time frame and I look at where the daily is and where the daily is reaching for, If we look at this on the daily with 6E, right, you can see we've had a bit of a market structure shift go on, haven't we? So we've had real bearish sentiment, right? And then we've had this change of character here, right? We've taken out this lower high, right? We've had a change in market. We've had a bit of a retracement here, right, into this order block, right? It's taken that as liquidity, and it looks to be reaching higher now. What could we possibly be reaching for? We've got this big bearish FVG here, right? So that's a target as well for liquidity. So always look on your higher time frames, where is price reaching to? You know, we've taken liquidity from here. We're going up, in my opinion. I'm looking at higher prices for 6C, right? If I wasn't looking, what could happen here for me to go, okay, maybe we're not, you know, a change in, you know, having breaking below these lows. We break below these lows. Where are we reaching for, guys? We're reaching for this liquidity resting below these wicks here, right? And it always lines up with, look, other higher liquidity. We've got liquidity resting down there too. So yeah, this is all relevant. So looking at your higher time frames, let's have a look actually for NQ for today. So today I'll be trading, I won't be trading Wednesday because we have a bank holiday. So we have got a bank holiday on Wednesday, USD bank holiday. So I will not be trading because, well, we're going to have no liquidity in the market, so I can't trade. So if we have a look at MNQ, what do we see on MNQ? We've just been bullish, 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 right? Creating high prices on NASDAQ. Now, looking at this, it is hard to know where you're reaching for liquidity-wise, just because it's just all the way up. We haven't really got a structure much, you know, we haven't had a little bit down, up, you know what I mean? So for levels, it's difficult. So looking at something like this, you know, you can look and say, okay, well, you can see where the bearish levels could definitely be. You can see we've got a lot of fair value gaps here. You know, we've got like liquidity here that was resting, was taken out from this break structure here. Then we had you know, the retracement model. So you can see on the higher time frames, this model also works, right? Change of character there. So people can actually trade this model on the higher time frame as well. So yes, looking at NASDAQ at the moment, we're just very, very bullish. And then for me then, looking at that, what would I like to see coming into Asia, you know, is some sells, just because we're so bullish. So what can we look at here, right? So we're on the 15-minute, right? So we've got liquidity resting above here. Now, depends on, look, our Asia range is only just forming, guys. So, you know, we can't really predict much. So that's 294 ticks. I don't see this being swept. London, it can happen, for sure it can, but I just don't see it. You know, it'd be more likely to come up, sweep these FVGs, sorry guys, sweep these bearish FVGs and then go down. But as you can see at the moment, we've got a continuation going on. So on the 15-minute, we've got this continuation of a sell. So we may have today a really large Asia range box if we just melt down. So it'll be interesting to see what happens. You can see we've got this leg here, and if we fib it up, we'll see where the 50% retracement is on this leg. So from the swing low to the swing high, right? So our 50%, so equilibrium in the market for us on this is resting here, right? So we may see, you know, price may come all the way down here, right? So we may have a large Asia box, and we'll just have to see come Asia. I will, as per usual, do a video if I trade Asia and we have a setup. I will do the usual video that I do. So anyway, guys, I hope this video was helpful. It's probably gone over time a little bit, but yeah, hopefully that makes sense. Hopefully now the nice viewer that asked me, you know, what is the liquidity sweep, hopefully that makes sense now and you can see it. Oh, I'll also show you too these indicators as well, because people were asking. So I use these. So then when I'm teaching or I've got a video going, you can see exactly why I entered, right? So I can trade a naked chart. So I can trade off this, because really all I'm doing, guys, with my model, right, is drawing out the Asia range. So all I would then do come, you know, my trading time is draw out the Asia range from 8 a.m. till about 1:30, right? My time, 1:30, I believe. So if we have a look at this Asia range, for instance, I think it stops at 1 o'clock. So if we look at this, 8 o'clock, 1 o'clock, it stopped, right? So yeah, so 1 o'clock. And then, yeah, so there's a few other things that I put in, like it would just be too much of a long video, but there is other concepts as well that go along with this, which, yeah, if you want, like I said, if you want a video on the premium and discount, let me know in the comments below. And yeah, I do use a bit of quarterly theory as well with my trading. So Yeah. So anyway, so breaker blocks with signals. I don't use this very often. I can see when a breaker box is forming with the naked eye, but sometimes I'll put this on so then, you guys can physically see, like I'll talk about breakers, I might put that on to teach. And then if we have a look at this one, the breaker structure, right? So you can visually see. So for me on the 1 minute when when I don't have this on, when I'm training myself, I just draw out my horizontal rays at where my change of character of breaker structure is going to be. But for teaching, it's so good to have that. For me as a learner myself, I like to learn by seeing. So, if this is helpful in the videos, let me know too, because for me it is. So yeah, the breaker structure, this is the indicator by nephew Sam. The liquidity heat maps, that will just, where these wicks are and where that liquidity is resting, it will just have that there. And then you've got your fair value gaps, right, which is, pretty self-explanatory, your gap in the market from your wick to your 3 candle sequence, which, most of you will know about. So yeah, it's just good for visual cues, guys, and for me as well, sometimes it's a lot quicker. It can be classed as lazy, I guess, but when I see my liquidity sweep has occurred, I'll just get my measuring tool, put it on, put my pending order. So literally, guys, when I put an order on, I'm just right-clicking on my box and then just putting my order in here, just quick, get it done. But yeah, guys, so that's all I'm doing. They're the indicators. Like I said, this one I don't use as much. But yeah, anyway, I hope that was helpful. And yeah, I'll catch you in the next one.